Welcome to USMK Insights, where we focus on US stock technical analysis. Using charts, trends, and price action will help you understand the market rhythm and make informed buy and sell decisions. Alright, hit subscribe and let's begin today's learning journey. President Trump's tariff policy has really faced a lot of twists and turns. Just yesterday, it was blocked by the courts, but now things have reversed again. The U.S. Federal Circuit Court of Appeals approved the Trump administration's request on the 29th. For now, it suspended the previous ruling of the U.S. Court of International Trade, which had blocked enforcement of Trump's order under the International Emergency Economic Powers Act to impose higher tariffs on multiple countries. This suspension gives the Trump administration valuable time to respond, but that's not the main point. What's important? The key is the suspension is not a permanent halt. So this issue will definitely come up again. It's not over yet. Because for tariffs to be used as a bargaining chip, they need two things: legitimacy and enforceability. If the courts question the legal basis, Trump's biggest leverage at the table could lose its impact. But the Trump administration will not let that happen. So the tariff issue keeps getting more complicated. That's why yesterday's market didn't perform well. As for the Nasdaq, its 2-point gain didn't hold. The market dropped from pre-market onwards, so by the close, the Nasdaq only finished up 0.39%. The S&P 500 rose 0.4%. The Dow Jones was up 0.28%, all small gains. So this issue is getting more complex. Given the current situation, it may leave us without a clear direction on where tariff policy will go next. No one can say for sure which direction tariffs will take. These back and forth battles will continue. So for now, if you focus too much on tariff details, you will just get more confused. It only makes things more complicated and hard to follow. Actually, the best way right now to understand the situation is to watch the market itself. Look at the price action, see how the three major indexes react. That alone shows you the market's real condition, because the market is always right, isn't it? So this approach is perfectly reasonable. So looking at last night, all three indexes had only small gains. Why were the gains so limited? Because after the trade court's ruling, Trump quickly appealed, so the market worried about another reversal. This uncertainty held the indexes back, that kept the markets upside. In the afternoon, the Federal Appeals Court officially voided the trade ruling. Trump's tariff policy was reinstated. Just like that, the story flipped again, so it's been back and forth like this. Constant reversals made yesterday's market far less bullish than expected. It didn't drive a major rally in the three indexes. However, there are 2 points that we need to pay attention to. Even though things have reversed, there are still 2 key issues. The appeals court wants the plaintiffs to argue the case on June 5th. Trump must respond by June 9th. He must submit his response by then. After that, the appeals court will decide whether to temporarily or permanently end the trade court's ruling. That's still uncertain right now, so this issue is far from settled. There will likely be more twists to come. In my view, no matter what the final ruling is, if things go well, the appeals court could permanently overturn the trade court's decision. If it goes badly, Trump will still find a way to respond. He can issue an executive order to keep his tariff plan going. He can stick to the tariff policy, but this approach would be more complicated. We shouldn't get too hung up on this issue. Don't overthink it. The risks from the tariff policy are definitely not over. Tariffs will continue to affect the market. We should focus on minimizing tariff-related risks. Where should we put our hopes? In the outcome of the trade negotiations, that's more realistic. Only a final trade deal will resolve this issue. Until then, nothing is settled. Only then will the market get a clear signal. Now that we're almost in June, the deadline for the tariff extension is approaching. Negotiation frictions may increase. There may be more conflicts, but there could also be some positive news. So in terms of sentiment, market emotions will fluctuate. That's normal. We can't really control that. So the market will keep reacting to those mood swings. It's completely normal. So what's the outlook for the market? Most likely, we will see a sideways market. It will remain range-bound. We discussed this yesterday. Most likely, the three major indexes will stay in a consolidation phase. That's already the best possible outcome. That's the best scenario for now, because there's still no result from the tariff negotiations. The final outcome is still unknown. How the talks will end is still unclear. Before we know, nothing is finalized. So the market will remain uncertain. That's why the market is very likely to keep moving sideways. So the market will stay indecisive, so we can focus more on individual stocks. For example, let's look at Tesla. Why talk about Tesla? Because recently on May 30th, Elon Musk, that's Elon's last day serving in a government advisory role. After his term ends, he will fully return to focus on Tesla's competition. He will be back at the company. Elon is the soul of Tesla. He's a key figure, a real driving force. So his return is a big positive. That's why so many shareholders want Elon back. They're urging him to focus on work because he's extremely capable. His leadership is crucial for Tesla's growth. He's a positive force. His forward-looking investment will definitely benefit Tesla in the long run. So for the market, even if Tesla's sales hit a bottleneck or face some challenges, like declining sales in Europe with sales trending down, even with these headwinds, going forward, if Elon returns to the company, he can drive a turnaround. By actively addressing PR and branding issues, if those are fixed, things will improve because this isn't a quality or product issue for Tesla, it's a PR crisis. If they handle the PR crisis well and resolve it properly, then Tesla can recover in Europe. The European market will come back naturally. So what's needed? Elon's full commitment. He needs to focus entirely on Tesla. That's a strong positive signal. So the market's outlook remains optimistic. After this news, Tesla stock clearly reacted. On that day, just that day, the stock showed a strong move. A couple of days ago, plus improved market sentiment, optimism returned. There was a burst of bullish sentiment. With this positive mood among the 7 big tech names, Tesla had the biggest gain. This shows Tesla responded well to this positive signal. The market's reaction was very upbeat. Investors really responded. So as Elon returns, the outlook for Tesla's share price is positive. It's a bullish sign. In fact, looking at Tesla's current situation, the performance has been strong. Though recently there was a slight pullback in the last 2 days, just a minor correction, but the pullback was very limited. It wasn't a big drop. The key point is Tesla's upward momentum is still intact. The uptrend remains. The stock is still rising. It broke through its 200-day moving average. It's also holding above the 20-day trend line. The breakout strength is clear. It's well above the 20-day average. That means the upward momentum is still strong. The momentum remains solid. Looking at the MACD indicator after the adjustment, bullish momentum is steadily taking the lead. Bulls are in control, so currently the bulls have the advantage. With bulls dominating, what are we worried about? We are concerned that at this level there's overhead resistance. This area above is a high volume trading zone, a heavy resistance area. During the rally, it will definitely face resistance here. There's clear resistance ahead. The closer the resistance, the more hesitant the price action, the more uncertain the move. That day we could feel it. There were 2 straight days of declines. Even though it opened higher, the buying momentum was weak. No real push to go higher. There was little willingness to rally. So it shows the main players are still hesitant at this level. There's still hesitation, still some strength. But resistance remains above. To break through resistance, what's needed? Higher trading volume. But lately, there's a weak signal. What is it? On the technical side, the technical indicators are not strong. Fundamentally, the optimism mainly comes from Elon's return. This is driving bullish sentiment toward Tesla. That's a reason for optimism. But technically, the performance isn't that strong, not particularly convincing. No follow-through. There's no technical confirmation with volume. Even with such a positive headline, the signal is good. If the technical side matched, the rally would be stronger. With strong technical support, the stock would push higher. But what we see is technically volume hasn't picked up. Still low volume. Volume has shrunk in recent days. So with resistance above, the market is still cautious, still hesitant. So technically, both are in control, both have the edge. But to stay ahead, they need to overcome resistance. That requires higher volume and more buying interest. But right now that's missing, which means the market is still watching, still waiting. If there's no breakout with strong volume, sideline money won't be willing to jump in now. So Tesla will likely stay in a range for another week or two. It will probably consolidate here. We're still optimistic overall, especially with Elon Musk's return. After he's back, there will definitely be a positive impact. But how big that impact will be and what real benefits it brings remains to be seen. So the market is still a bit hesitant. Recent price action makes this clear. Tesla is still in a dominant position, but its rally strength isn't that strong. The push higher isn't that convincing. The low volume shows the last 2 days have been on weak volume. Small corrections on light trading. This minor pullback hasn't had much impact, but for the breakout, you need more volume. There needs to be steady buying, consistent volume. As we said before, you don't need massive trading volume, but you do need gradual, steady increases, small, consistent upticks in volume. This kind of steady volume creates a healthier price volume relationship. Volume should slowly build up, not spike all at once. If there's a sudden surge right at this level, it could be misleading. A huge volume spike here would make the market think it's a sign of heavy selling. What does that mean? People might think it's a big player selling out, that there's a lot of selling pressure. So just moderate steady volume is the best. Gradually increasing volume, step by step, solid steady progress. That's how resistance above can be effectively broken. A real breakout. That's exactly what we want to see. That's the outcome we're looking for. So over the next week or two, I think Tesla stock probably won't see major moves. Elon's return alone won't trigger a huge rally. It's mostly a positive sentiment boost. Sentiment helps, but it's just one factor. What is still needed? We also need strong volume. And more than that, we need real progress. That means improve the Tesla sales or maybe some new technological breakthroughs. Those are real positives. Elon Musk's return is helpful, but it's not a huge catalyst. It just sends a positive signal for sentiment. Whether this optimism draws in investors remains to be seen. Looking at Tesla's trading, there isn't much active buying, so going forward, the stock will likely stay range bound, especially for the next week or two. It will probably just consolidate. Overall, expect mostly sideways trading for now. Right now, the entire market's mode is the same. It's still indecisive. Why is that? Because of the tariff issue, the whole story keeps changing suddenly. So the price action is choppy too. It's indecisive. We have to wait for a clear signal. Only then will the stock have a clear direction. So that's my brief analysis of Tesla right now. If you have any thoughts on this, feel free to leave a comment. Let's discuss together in the comment section.